Everyone, John here, and I have a special guest today. Someone who is helping me, who's actually my accountant, and is advising me on my matters as far as taxes. Someone who I met at actually the Thrive conference. His name is Mark Kohler, and he is just a really good person for entrepreneurs, for accounting. I was impressed. I'd seen him on stage, and he just made it like it was interesting to listen to him talking about stuff that is normally boring. So I think that's a really special talent. He's got so much going on. Also, just I was impressed by looking at just that he's an entrepreneur himself with multiple businesses, multiple things that he's doing, from podcasts to books that he's written to products and courses that he sells online and even on YouTube here. So thanks for coming on and welcome, Mark.
Oh, John, it's an honor. And thanks for that nice intro. And I love everything you're doing. It's fun to be out there on YouTube or podcasts and writing. And so, no, it's an honor. So thanks so much.
Yeah. So I wanted to bring you on just I think a lot of people are often asking me about, like, what am I doing tax wise, and I talk about finances and stuff on here a lot. And I think that you've got some definitely valuable insights in the tax world and in the legal world too. Mark's also a lawyer, right?
Yeah.
Yeah.
I was going to throw that out. And I think I want you to feel confident that what you hear today, just in this short 40 minutes, 50 minutes, whatever we do, that you're getting critical information that you can rely on. There's a lot of people out there that like to blah, blah, blah about taxes or legal, and they have no business talking about it. And that's
Right.
why, John, I was grateful you had me on, because you're like, man, I don't want to screw this up and say something and get someone in trouble. So I really am a lawyer, partner in a law firm, senior partner, and also a CPA, a legitimate accountant, certified public accountant, licensed in like 5 states, from California to Hawaii to Arizona and Utah. And so I'm helping clients all over the country. I've already had phone calls today out of Florida, Michigan, New Jersey, to clients yesterday in Honolulu. So it's very common to help people nationwide with their entrepreneurship and tax and legal planning. So today, you're going to get straight answers that if your accountant's not talking about this or your lawyer doesn't get it, you may need to upgrade. So we'll see how it goes.
Yeah, I love that because so many people try to dodge the bullet and pass the buck and say, well, this is my opinion, but you need to check with your lawyer. And
Yeah.
you're giving us stuff that we can actually rely on and say, okay, we could take this to the bank. So
Yeah. It drives you crazy. People get advice all the time. In fact, today I do a weekly newsletter online. It goes out. It's been going out for 10 years every week.
Wow.
And I write a weekly message. And this week, it's funny you bring that up, John, because my message this week, the heading was "Don't forum shop." And what
Mhm.
I mean by that is, you try to look for the answer you want to get until you get it. And
Right.
I was joking about this. I mean, and forgive me here, I got to shut this door here.
Oh, sure.
Sorry, we've got a little construction going in the office today too. So it's funny, if any of you think out there, how you're dating this guy or this girl, and you want to date him, but if you talk to your close friends, they're like, dude, she's bad news, but you keep asking friends until one friend says, no, dude, you're good, and so
Exactly.
you
Yeah.
kind of keep asking people until you get the answer you want. And you only give them the facts that so that they'll give you that answer. And people do that with tax and legal. They keep asking the question until someone says, oh, you can do that. And then they think they're good when really they're jacked up. So it is funny that way. We want to get good answers that people will actually sign the dotted line and back it up. So that's us. Anyway.
Yeah, no, that makes a lot of sense, and and I think that it's important to have someone who's going to stand by it too, right? That's the thing is, I remember one of the things that really like opened my mind about the whole tax and legal system was I was speaking to, I forget exactly what I was dealing with, but I like a law firm, and then finally got to their high up tax lawyer. And he was basically telling me like, yeah, everything is kind of on the spectrum of like what the interpretation of what is correct and how risky it is. And when he said that, I was like, wow, that kind of makes sense. Like I've been like with what you said, is like you could find a lot of advice that said that yeah go for this, but it's like super super risky. Right? Whereas it's like you got to find that right, and to have someone that you can trust that knows where that is, like what risk are you going to take, versus how solid of ground are you standing on, I think is really important. And that's been difficult for me to find. I think in the past I've had a lot of accountants and CPAs that I've talked to that have been super extremely risk adverse.
Yeah.
I'm like, well, but like someone really has to know what they're doing in order to be somewhere where you're optimizing, I think. So
Yeah, no, I'm hearing you. Okay, now you asked me, we can talk about S corps, LLC structure. That's the beauty of being a lawyer and an accountant. We can
right.
talk
Okay.
about your structure. Many of your followers may have the same, what they need to hear. We can talk about hot write-offs, the new tax bill by Trump and GOP. Whatever you want, man, let's do it. So I'm all yours.
Okay, so let's actually, let's go through. I've actually got some actual questions for you that based on what I'm working on right now. So I think that'll be cool. I think a lot of people are familiar with a lot of my financial circumstances, so it'll be interesting to find out some answers from you on some of these things. So let me see. So one of them, the big one that's probably been on my mind, is I have an old 2005 Toyota Corolla.
Okay.
And it's time to at buying a new car or leasing a new car, because I could keep the Corolla. I'm looking to figure out what makes sense. Like what do I need to look at? Does it make sense to lease, and can I just write off 100% of the? And one other piece of information here. I'm looking at I've been driving a 2005 Toyota Corolla for a while. I'm looking at like a BMW, like maybe a $60,000-$70,000 car at this point. That's kind of what I would like to upgrade to.
Man, all right. Well, boy, you threw out a lot. This is good.
Yeah.
In fact, I do a whole podcast on how to write off auto. So I'm going to give a little more truncated answer here, because we could spend the whole time just talking about auto strategies, which is an important one. Many of you watching this right now that are followers of John, you want to make sure that your auto deduction is a strong one on your tax return. And you're right, a lot of accountants are wimps and too conservative. So let's rock it.
Okay.
And then there's a financial component I want to mention about going from a Corolla to BMW. I might have to give you a little financial intervention here. So we'll see how that goes. So the first thing is, when you write off your auto, everybody out there, your auto is a deduction. At some point, you're going to get in your freaking car, your truck, and you're going to drive to meet a client. You're going to go to a conference. You're going to go to the Apple store, Best Buy. You're going to do business in your car on a regular basis. Now, some of you, it may be a little more intermittent. You've got a day job, you're doing business on the side. And others of you, it's freaking 100% business. I get it. You've got a second car with your spouse or a piece of crap. You might even keep the Corolla as around just to drive it as a commuter and use the leased vehicle for the nice meetings, which we're going to talk about. So there's a lot of strategies here. But anyway, the point is everybody's kind of on a different continuum. So let me say, first and foremost, the easy no-brainer is all of you should at least do mileage. That's option one. Mileage this year is 54.5 cents. So any of you that are doing part-time business, you don't have a full-time business vehicle or even 80, or you have to have it over 50% business if you're going to write off more than mileage. So let me repeat that. If you're going to do more than mileage, you've got to use the car at least 50% business. And you got to be able to document that. Like, yeah, I don't commute for work, or I'm not driving to go see my girlfriend in San Francisco or whatever it is. I've got mostly business mileage. So mileage is first option, 54.5 cents this year. Do your best to track miles, people. Don't stress about keeping a little record every day, every this and that. You can do mileage that is you can estimate it to some degree. You want to be honest and ethical about it. There's apps out there where you can do the GPS tracking, which is cool. Some of you that are more anal engineer types, you can go that route. It's cool. All right. Now, option two is going actual. Now, under actual, John, I even have some slides on this and diagrams. I got videos on my site on this, my YouTube channel. So, folks, you're going to want to do a little more research on this. But generally, under actual, you could lease, you could buy a truck, you could buy an SUV, you could buy a car. There's all sorts of options under actual. And then that's when we start writing off fuel, repairs, maintenance, the lease payment. We do depreciation. Now, here's the general concept or rule this year. It got freaking better. It got better. The new GOP Trump bill, for lack of a better word, or words, is called the TCJA, the Tax Cuts and Jobs Act, made writing off a vehicle better than it's ever been in the last 30 years. Oh, wow. So if you're going to go buy a new car this year, freaking cha-ching, there's some options. Now, I will say this. Let's get leasing off the table. I'm generally not a fan of leasing for my clients, and only in a limited window. And let's just get that out there, because leasing, you got mileage limits, and I've leased cars before, and all of a sudden you're in that new BMW and you're driving all over the place, and all of a sudden you're jacked up on miles. And when you go to return that vehicle, you're going to get screwed. So mileage is a lease. Because of the mileage limit, a lease works really well when it's a second or third car. It's a luxury car. You bring it out for the nice appointments, the nice dinners out. You want to look flashy at the business meeting, or blah blah blah. But it cannot be your primary car, because you're going to get screwed. So keep the Corolla, and then go. I go look at Lease Trader too. Have you looked at that, John? It's pretty sweet.
That's where you buy out like a lease.
You pick up a lease of someone that's in the middle of one.
Okay.
They're trying to get out. And so you can get some killer deals. So if you're going to, you can pick up Bentleys for a lot cheaper than you thought, and you don't have to come in with the cash down and other issues. I mean, that's going on to the extreme. But there's all sorts of leases out there at leasetrader.com, just like autotrader.com. Go check it out.
Okay. But yeah, I was going to say my mileage is probably like a 7,500 a year. It's like pretty low mileage.
Yeah, and if you can live with that, then leasing can work. A lot of entrepreneurs are on the road. They're either checking on real estate, they're meeting clients, blah, 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 blah. Now, internet marketers and those working on the web, which you do a lot of, your mileage might be a little less. So you can get away with a lease. All right.
Okay.
Now, finally, sorry, that was clap. That was maybe loud, but I'm excited. Okay. Third option. I'm going to shut up after this, John, and then you drill down. Okay. I told John I was going to not talk this much, but freaking.
You're good. You're good.
All right. You ask a hard question. Okay. Now, when it comes to buying, this is where the real bang for the buck is this year. If you want to buy a truck or an SUV, it is almost unlimited. If you bought a new, one of the new Range Rovers, you bought a new truck, an F-150, these are going to be 6-foot beds or greater, or way more than 6,000 pounds. The 179 and the bonus depreciation, even if you buy used, you could write off 100%. You could go out and buy a $60,000 vehicle. And write it off all in one pop. Now, you've got to have a business income to justify that. I don't want to create a massive loss. And there are little limits in using bonus and 179. Any accountants out there listening, you're cringing. But the point is, people, if you're making good money and you want to go out and get a 6,000-pound vehicle, SUV, truck, or bigger, the write-offs are unbelievable this year. Now, also, cars got better. So if you want to go buy a car, you can write off almost 71 to 78% of the vehicle in the first 3 years just in depreciation. You can take $18,000 right off the top, plus fuel, repairs, and then depreciate the rest of it over the next 2 to 3 years. It's amazing. So anyway, I would just say in summary, any of you, like you, John, you said you're out shopping. You want to talk to your accountant, go through the numbers, look at your mileage, look at your business use percentage. What do you want to buy? And crunch the numbers there. And I think it can be really powerful.
Okay. Yeah, that's good advice. That makes a lot of sense. That's so I'm trying to think what my questions are. So the leasing is what I was leaning towards because my mileage is pretty low, like 7,500 a year. And I could write that entirely 100% off as a business if I leased a vehicle under my business.
Good question. Here's the thing. Just because your business leased it doesn't mean it's 100% business.
Right.
And that's why I've said keeping the Corolla around, because you're going to use the Beamer to go get some groceries. You're going to go to the movie. Well, is
Right.
it 100% business now? Hell no. You
Right.
know, so you're going to have to go 90% on the lease payments, 90% on fuel, blah, 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 because 10% is personal. Now, if you can say, oh, the only time I go to the grocery store is when I use the Corolla, or whatever.
Yeah.
So then you can argue with the IRS and you're okay. So you got to have kind of this safe harbor. What the hell am I driving for personal? Um, and one thing I want to say to all your listeners, John, I know you're quite successful. You're at a point now where things are like, I can afford a BMW. That's what I've worked towards. I'm going to freaking pull the trigger, right?
Right.
And I think leasing could get you into a nicer car per month. Buying could give you even a bigger write-off. So you're going to figure out, what makes sense from a tax perspective and a financial perspective. But I want to tell a lot of the other entrepreneurs out there, be careful.
Oh yeah.
Things can be good. And I know, John, you'd say this to all your entrepreneurs, but I tell a lot of clients, this is millionaire next door. I'm driving, I'm going to tell you right now, I'll be honest about this. I'm driving a 2015 Nissan Xterra. I've got some big tires on it and a rack on top. I'm a very utility kind of guy. I like to go hunting and fishing and camping but my wife's like, you should go get a Range Rover. You can afford it. And I'm like, you know what? I don't need that.
Yeah.
I value my bank account. I value cash flow more than I value what I drive on the road. And I think entrepreneurs, is they really get down the road and they realize how much some of these luxuries cost. They're like, man, is it worth it? So anyway, I know you're at a point now where you can do that, but your listeners, be careful.
Yeah, no, I would echo exactly what you said. I mean, like I said, I've been driving a 2005 Toyota Corolla for the last, what's it, like 13, 14 years.
Now that might be a little much.
Yeah. So I made some sacrifices, but I mean, like when I look at cars, when I'm in the dealership, I'm like, well, and anything, basically, it's not even in my price range unless I can pay cash for it, like three times the sticker price, right? That to me, was what makes it affordable. So I would say the same thing. Is it's like, I mean, if you have to make payments on it, you can't afford it. That's my general philosophy, and that's what I definitely would
I like that.
love this channel, right? You should be able to buy it twice at least in cash if you're gonna buy it, even a used car. That's my opinion on it, but I'm pretty frugal when it comes to that. So
that's cool. Yeah, pimp your ride, baby. You need to pimp it out. So you're due for an upgrade.
Exactly.
All right, what else you got, man? This is good.
Okay, yeah, I guess I'll have to like go through some more of the details of it, but yeah, okay, I think that gives me a good place to start, because deciding whether or not to buy it cash or not. The cash thing sounds like it just seems really, but I don't know. I look at it as like it's almost like a 50% discount, right? It's like,
dude, now slow down. This is important.
Mm-hmm.
Okay, to get the write-off for buying a vehicle, I can go buy a $60,000 vehicle with $1 down and finance it and still get a $60,000 write-off.
All right. Oh,
I don't have to buy it with cash. So this is the point I would make to you, John. You're going to get a freaking awesome write-off, whether you lease or you buy. You're going to get a great write-off. Don't let the tax tail wag the dog.
Oh, I see. Yeah, exactly.
What you do is say, what makes the most economic sense?
Right.
This is why sometimes buying a car sucks. We all hate buying a car in some ways. We love the new car smell, but it's miserable going down there, right? It's just money out the door every freaking month. So you got to decide, am I going to own or lease? How many miles am I going to put down on this? Am I going to get a loan? Or am I going to buy cash? You got to be pretty darn rich to go out and throw down $50K on a new car cash. I tend to finance my vehicles. There's going to be a monthly cost to it anyway. I like to buy 1 or 2 years used because I get still that newer looking car, but I don't pay the depreciation right off the lot. And everybody's going to have a different approach. I get that. So here's my point. You do what's best financially, and then I'll write off everything. That's the easy part. I get calls on December 31st. Dude, it's so funny. Every December 31st, I get a guy calling from me from the dealership. Dude, I'm going to buy a truck. Should I do it? Dude,
Side, yeah.
You know, and he's like, no, I just need a write-off. Don't throw good money at bad just for a write-off. Make a good financial decision first, you know.
Okay, yeah, that makes a lot of sense. Okay, yeah. So it seems like either way that I go, then that it'll be, it's going to be a pretty big write-off. So
it will.
Yeah.
It'll be good. I'm going to write it off. 90% of freaking everything will be a write-off.
Yeah. Okay. All right. Cool. So one of the things I think that well, actually, this is I've got two potential points. Well, let's talk about this one first, which is one of the things that I get actually just from people who subscribe to this channel, who are entrepreneurs, who are very confused about the whole, and I'm sure this is probably one of the biggest questions you get, is the whole S corp thing, right? Between self-employment tax, where does it make sense to actually form an S corp? Right, and to pay yourself a salary versus, so I think a lot of my audience, especially they're freelancers, right? They do, so they may be making money. They're doing all 1099 income that's coming in, so or they're starting their new business. What is kind of the basic strategy that someone should use to determine whether or not they should start an S corp and pay themselves a salary, or if they should just stay with the regular LLC and pay the self-employment tax and whatnot?
You bet. So let's get some important foundational points out first. Everybody listening, I almost want you to repeat this. LLCs do not save taxes. A limited liability company does not save you tax.
Right.
If you're a freelancer and someone's giving you a 1099, or you're doing affiliate sales or Amazon reselling, you're selling on the web, Etsy, whatever. When you make money, you get to write off your car. We just talked about that. Do I have to have an LLC to write off my car? No. John, you can still write off your car whether you have an LLC or not.
Right.
So why do we set up LLCs? LLCs are for asset protection. They're for partnering. They're for doing business, getting merchant accounts, looking official, getting some asset protection, but they don't save taxes. S corporations save taxes.
Right.
Now, when's the trigger? The trigger is, I'll get right to it, when you're netting about $30,000 a year. When you start to take home $3K a month, you're like, man, I'm making $3K a month. That's after internet and cell phone and auto and home office and all the crap. You're making about $3,000 a month. Then we need to convert your LLC into an S corp, or go out and set up an S corp.
Right.
But you've got to make the transition. You want me to tell why? You can go for that?
Yeah. Let's go for the why. Yeah.
The why here, people, is when you're making money and John's out there making 10 grand a month, whatever he's doing, 5 grand a month, wherever range he's at. If he's an LLC or just starting out, he's going to pay self-employment tax on every dollar he makes. It starts at 15.3% on the first 130 grand. Then it's about 2.5%, 3% after that. Then it gets into Obamacare at 250 grand. The more money you make, the more money you pay. It's brutal. That's self-employment tax. But when you're an S corp, and that corporation, not an escort. Some of you losers down in Vegas, I'm not saying escort. You're going to get an S corporation. This is an S corp. You're going to convert your LLC to an S corporation. And now you're going to take a salary. So you take a little bit of salary, pay your FICA, your self-employment tax, the F word, FICA. You're going to pay that piece. Then everything else dumps out the bottom as a kind of a dividend, if you will. Right. And you get the new 20% pass-through deduction under the Trump GOP deal, which is sweet. S corps even get better. I've been preaching them for 15 years, and they just got freaking put on steroids. They're even better. So you do this split. Now, if any of you are like, want to learn more about this, get to my YouTube channel. Just type in Mark Kohler S corp. Boom. You'll get 3 or 4 sweet videos. You'll digest it quickly. You'll know what you need to do. And here's the one last tip, John, and then we can beat it up if you want, is if you're an LLC now in 2018, I can backdate you to an S corp as of January 1st, 2018. So
right.
You can capture the whole year, but you got to do it now because you got to do payroll before the end of the year. You can't call me next February and go, hey, Mark, I watched that YouTube thing of John, and I want to backdate everything to 2018. You're screwed You're SOL. I'm talking statute of limitations. So you got to just get into it and get into it now and start following the procedure. And it's not terribly expensive. You know, a new S corp at our office is $800. You get an hour with an attorney. You can convert an LLC for around $125 and then start payroll. Payroll's going to run you around $40 a month or around $125, $130 a quarter. So you're going to spend $500 to $1,000 a year with tax return prep and accounting. But let me see, John, you answer this. Spend $1,000, save 10. Okay, now I know that's a hard math. It's hard math, people. You see, my accountant is a pain in the ass. He's costing me $1,000. That better be, that's dumb. Even though I'm saving 10,000, I don't want to pay an accountant, so I better not do it. That's what I fight every day. People, pay for professionals. You're going to save thousands. Damn it.
No, yeah, that makes sense. That is so just to clarify for people, so then if they're making a net profit of over 30,000 a year, that's when it starts to make sense. Not their gross. So at the end of the day, if they're putting this taxable income of $30,000 in their pocket, they're either going to pay that, you know, self-employment tax on that, or they're going to do an S corp, pay themselves a salary and slice that down so they're only paying. If I got that? Oh, I lost your audio. Yep. Okay.
Yep, we're here. And the screen froze. You might tidy that up on your edit. I'm sorry, John. If you're going to just go straight on this, everybody, sorry, there was a little delay there. But John, you explained that phenomenally. That's exactly right. People, you want to get that. And the tip is get the LLC started now.
Yeah.
So that you can convert it back if you need to. If you call me up in January and go, dude, I did it. I made 30,000 in 2018. Do you have an LLC I can convert? No. Did you do your payroll? No. Well, then start 2019 right. But 2018 screwed. So the sooner you get with an account that knows what the hell they're doing, and guys, trying to cut this out on TurboTax ain't gonna fly.
No, yeah.
Yeah, it's time to upgrade, people.
Yeah.
If you got a day job working at Starbucks as a barista and you want to do your W-2, feel free.
Sure. Yeah.
Cool. I can't save you, but if you're an entrepreneur, you got to freaking get an accountant that understands entrepreneurs.
Yeah, and it made sense. And what we did with my stuff is I think we finally got it situated, because I misunderstood this S corp stuff because I had multiple S corps, and that was a mess, because now I'm paying all this extra money and I'm trying to split like half my salary here and half my salary there. And then what Mark had me do was to take it and say, okay, you know what, you've got this one S corp, and then all your other businesses that you own or that you partner in, these LLCs, they're just regular LLCs, and they're all owned by this one S corp, and that one S corp pays you the salary. And that helped me also, because I was, you know, some of the tax deductions, some of the things that I buy, like when I buy a new camera, for instance, for YouTube, like where does that, you know, which business does that go to? It's kind of like at the higher level, because it's going to be used for it just made it very, very easy, instead of me having these multiple islands of businesses that weren't connected in some way. So that made a lot of sense, and it simplified things quite a bit. So it's worth getting I wish I'd gotten that advice earlier on, because we had to like convert, actually the simple programmer company from an S corp back to a regular LLC, and then that change the ownership. But I think it's all pretty much straightened out now. But
yeah, and folks, you may be going, man, John, what were you thinking? But that's the problem again. Sometimes there's advisors out there, everybody's kind of leading the blind, and I know, John, you really value that, and that's why I feel like I'm a voice out there. Trying to help people get organized from the beginning. And it doesn't have to be expensive. There's some cheapskates out there that are very expensive. I say cheapskates because they rip people off, in my opinion, and they're charging $5 or $10 grand. They're trying to set you up in Nevada, and they've got some sort of Nevada twist on this. Watch out, people. I'm not doing that. And get a second or third opinion if it sounds sexy. And if you're paying your accountant or lawyer to set you up, and they're charging you more than $2-3 grand, get a second opinion. I'm not even that much. Guys, I'm the best-selling author in America as a tax lawyer, first of all, business owners, #1 podcast for tax and legal, a YouTube channel, no one's touching it for what I do. And that's what I do, is help small business owners like your listeners, John. And I just say that not to be salesy. Find
Right.
someone like me if you don't like me. But my advice should resonate with you. And that's what you should be looking for, people. So be careful. It's a
Yeah.
jungle out there.
Yeah.
To quote the infamous Axl Rose, it's a jungle out there, people.
It's true. It's true. There's definitely, I've spoken to very many lawyers and accountants, and I've gotten all variety of advice, and sometimes ridiculous prices on things like, I have a lot of Idaho LLCs, and I set those up. I mean, this was back in my poor days starting out, but because I was creating them for real estate. And I got the advice I was getting. I think I was getting, at that time, the accountant wanted to charge me like $3,000 for LLC, and I looked it up and I was like, well, I can just file this form and get the and file with the IRS, and there we go. And I've got. I mean, obviously, I didn't have very strong articles of incorporation and or the what you call it.
Yep.
But so it wasn't the best thing, but I mean, there's options, at least, like if but there wasn't going to get swindled. I think there's a lot of, it's real easy to get swindled today.
It is. And John, I like what you said. For everybody listening, I'm so glad you've made it this long, because some of you did not want to hear a tax and legal podcast and broadcast. I'm grateful that John did this. But let me say, John makes an important point. He went from two extremes: someone that was charging way too much, was going to swindle him, to doing it himself and screwing it up. There's a happy medium, people. We could have easily been in a range of maybe $1,000, and he would have got a time with a real lawyer, a real accountant that understand what he was accomplishing and trying to accomplish, and put together a 2 to 3 year plan. So as he evolved and grew, he knew where to add those bells and whistles. Then he bumps into me 5 years later, 10 years later, and we're having to unravel everything. And he ended up costing him much more along the way.
Yeah.
And because he went to the other extreme and did it himself. So people, get some help. We have a little company maintenance program, $150 a year. We do your minutes. We keep it in good standing with the state. We could do privacy addresses where your address doesn't even show up anywhere. We can hide you. We can do all sorts of things for just a couple, $200-300 a year. Very, very affordable. Just get to our website, KKOS Lawyers. KKOS is in Sam, lawyers. And you just Google that and you'll see what we're about. Give us a call. We'll even do a free interview for 15 minutes just to see if we're a good fit. And if you can't even get a lawyer to talk to you for free, we're not going to give you advice. We're going to introduce what we do. We don't give away free crap. But for 15 minutes, you should be able to interview any attorney or CPA, people, and find someone that's a good fit for you.
Yeah. And I like, one of the other things, just speaking of that, is that I've got it actually up right now, but I like what you do is draw the diagram, right, and show where all the entities, the business entities, right. I'm looking at it from last year when we looked at this, and I'm like, okay, check. We got all these things done. It's looking like how it should look now, and that just helped me to visualize it, especially because when you've got like, multiple LLCs, and it's like you're trying to remember or trying to explain this without the visual, it's very, very difficult to do. And it also confirms too, right? Like when I saw you draw this diagram, when I was talking to you, I was like, okay, you understand what's going on. Because sometimes I would be talking to accountants and I'm like, do you remember this other business that I have over here? And it's like, I'm not sure you got it all, right? But it's like, this makes it very, very clear. Okay, it's all written out here. So I think that's important too. It's like when you're interviewing someone to make sure that they actually they're understanding your situation thoroughly, because that makes a huge difference.
Yeah. And what people, so what John's looking at, what I do is I do a screen share with clients, and we create an entity platform where you can grow into something. We can put what you have on the table and put the chips where they're at, and then a visual it says 1,000 words, right? A picture says 1,000 words. And just this morning, I think I said I was already on a client call out of Michigan. We were on the phone. The client was a little hazy. I was trying to understand what they were doing. I said, turn on your TV. Turn on your computer. And we shared a screen. I built a bubble chart. I email it to them after. They're like, oh my gosh, now it makes sense. All the lights are going on for me too. And
Yeah.
so that's what John is referencing, people, is when you work with one of our tax lawyers, we create that bubble chart for you, and it's really helpful. So
Oh, I was going to ask you, are you going to be at FinCon next week?
I'm not, I'm sorry. I've got some family commitments, and I wish I could be there. So anyway, you're headed
Okay.
down, huh?
Yeah, I'm actually speaking at FinCon next week. So
Oh, cool,
yeah,
man.
so
Ah, wish
that'll
I
be
could
cool.
hear you.
So that I was actually thinking of that because I had one other thing that I'm finally, like, we talked about this a little bit, but I think it'd be kind of cool to hash this out a little bit more, is the whole 401k thing. So
Oh,
if
yeah.
you remember, I've been against 401k for a long time. In fact, I've done videos on it, and I think it, again, depending on the situation, I still have definitely some strong aversions to how it's been used in the past by most people. But I was talking to this guy. I can't remember his name now. He probably maybe doesn't want to. Anyway, he owns a site called College Investor. Really, really bright guy. He's going to be at FinCon as well. And we were getting to the 401k debate over dinner, and I was like, no, if I'm not worth $100 million by the time I'm 65 or 59 and a half, then I failed anyway. So I don't care. And then finally he was like, look, like, I know what you're doing with the real estate. And he's like, if you have a self-directed 401k, you can just do real estate deals just like you're doing, and they can be partners on your deals, and you can do 1031 exchanges within there. There's nothing that would prevent you, and you could roll it over into an IRA and pull out the money early if you needed to anyway. So this is so what's your take on that? I mean,
Yeah.
based on what I'm doing. Yeah.
Yeah, I am a huge, okay, now I'm going to put this in perspective because John, you and I are on the same page.
Okay.
I hate, and I cannot emphasize it enough, Wall Street. My
Yeah.
newest book is subtitled "What Wall Street Isn't Telling You."
Yeah.
Fees, I could just go on and on. Now, the problem is most people attribute their 401k to Wall Street. I get a
Right.
401k. I can only invest in Wall Street. So no wonder you hate 401ks, right? Because I get this vehicle and the only buddy driving it is my retirement plan guy who's selling me crap I don't need, and my 401k is a joke.
Right.
Well, for 20 years, we've been a voice out there on the rooftops trying to let people know you can set up a 401k for yourself in your own S corp.
Mhm.
You control it. It's self-directed. You can have a checkbook for that 401k. You can form LLCs within that 401k. You can buy real estate, Kentucky racehorses, Super Bowl tickets, and resell them on StubHub. You can invest in notes, any type of business that you envision that's legal. You can do that inside your 401k and make the money tax-free or tax deferred. It could be a Roth 401k. So point number one is, if you control your 401k, and I can control that there's no taxes in that process, that's huge.
Mhm.
And then the third thing that's just like the cherry on top is no one can take away your 401k. OJ Simpson
Yeah.
is still living on his NFL 401k. And so, John, you might be worth 100 million when you're 59 and a half. But man, one lawsuit, one embezzlement, one problem, market industry change, you could lose a lot, right? But
Yeah.
you can't lose the 401k. No one can take it in any type of lawsuit. It's huge.
Yeah,
So
that was a big factor too. That when he mentioned that, I was like, okay, well, even if everything else turned out to be a wash, like, just the fact of, because I do so much for asset protection now by creating multiple LLCs and getting insurance and getting umbrella policies, and I'm like, well, this is the one untouchable one. It makes a lot of sense to have, at least some percentage of your assets in there where it's untouchable. So that was, I think that was probably the thing that was selling me the most, which it's a hard, I mean, I've been so against 401k for such a long time. So now I'm actually thinking that I'm gonna have to set up a meeting with you, and we're gonna have to figure out how I'm finally gonna turn over and set up this 401k. So
well, and on that, finally, I'll just summarize with this. So some of you understand the process is, once you set up an S corporation, you've got your salary set up, you're writing off all your expenses, you're taking your income and draws and salary, and we're saving taxes, and you start to make more money, people. That's the goal, right? And you're going to get more and more profitable. In my newest book, The Business Owner's Guide to Financial Freedom, the Business Owner's Guide to Financial Freedom, I teach clients, start taking some of that money out of your business. Diversify. Don't put every dollar back into your business. You don't want all your eggs in one basket. So pull some of that money out, buy some real estate, form a 401k. Now you're getting a write-off to put money in a 401k to buy other real estate. So now I got multiple buckets of investments. I'm getting a tax write-off to do it. We set up 401ks for $1,200, and you can self-direct. There's not many places out there that set up a fully self-directed 401k for groups or individuals. We're literally a handful of 5 companies in the country. You get lawyer support in the process. You're getting write-offs. And anyway, so you can YouTube me and type Mark Kohler 401k, and you're going to see a lot of info out there, just so you can get educated on it, people. But you'll love it. It's amazing.
And this is different than like this is a fully self-directed 401k where because I know there's companies that do like directed 401k, like where you're still restricted.
Oh yeah, Scottrade. Yeah, Scottrade's like, oh, this is a self-directed 401k, but you can only buy their crap.
Right.
You can, as long, I mean, there's only just minor limitations like collectibles. You can't buy wine because it turns into a bottle collection. You can't buy paintings and artwork and put it around your house. So collectibles are out the window. But I've got clients buying mobile homes, commercial buildings, racehorses, cattle, raw land, farmlands, trading notes. All of that you can do in your 401k, and you control it. No stockbroker fees, no financial fees, nothing going to Wall Street. It's all going into your pocket.
And then you don't have to worry about like 1031 exchanges for things that are in the 401k, right? Because there's no, you just buy a piece of real estate, sell the real estate, buy another piece of real estate, and never pay any taxes in between.
Now, there's some nuances. We've got books we've written on this. The Self-Directed IRA Handbook, written by my partner, Matt Sorensen. Best-selling book in the country on this topic. You're going to learn about UDFI, unrelated debt financed income tax, and UBIT tax, and using debt and leverage, and what can you pay for. You can't buy your own plane ticket to check on your rentals. There's some prohibited transactions, yes.
Right.
But that we give you a comfort letter that says if you do this, you're okay, and if you get audited, we pay the bill.
Right. That's good.
Again, back to full circle to getting real lawyers to set this crap up. Don't listen to some bozo on stage selling it that's not a lawyer or an accountant. Damn it.
Right. I like it. Cool. Awesome. Well, I think before I let you go here, what are like for people that are starting out as entrepreneurs, maybe if you could give just like a few kind of basic tips, like for them starting out on the right foot. And I know you've talked about, I mean, obviously the one that I would highlight, I'm actually going to take this one away from you since you already said it, which is that find someone qualified that's going to give you good advice. That's where that pay the money. And so I think that's definitely where I would start. But what else would you say for an entrepreneur starting out, especially when they're cash strapped, right? They're starting out. What things can they do to make things easier for themselves later on?
Yeah, let's go through a quick list. Everybody's at different stages. The first thing I'm going to just say that comes to mind is make sure you're tracking all your startup costs. You may not be making money this year, but you're in startup mode. You're not in startup mode with you're not in business with a lemonade stand until you sell the first cup of lemonade. But you've got a lot of costs setting up that lemonade stand, people. So you may be watching John here, kind of getting your feet wet. Well, you got tax write-offs already. Track all those expenses. They're called startup costs. Go to YouTube and hit Mark Kohler startup cost. Watch a video on that. I hope you learn how to track that. Number 2 is you don't know what you don't know. Keep learning. Pay attention to John's podcast every week. I've got a podcast, my YouTube channel, my videos, my live things. That's going to be really helpful because you want to soak up as much as you can so that you don't get into problems. Number 3 is be flexible. I hate that statement of, 40% of businesses fail in the first 3 years. No, they didn't fail. The business owner gave up. They weren't flexible. It's okay to change your plan. It doesn't mean you're a failure if you modify the plan.
Right.
Be agile, adapt. Use a strategic plan, use a marketing plan. Start your concept out with a business plan and really see if this is going to make sense for you. John, you don't even know this, but I'm going to throw it out there. I apologize to self-promote here, but I've got a new program called 8 Steps to Start a Business. It's
Okay, yeah.
$99. It's a workbook. You fill it out as you go. You determine if your business is a good idea, and you watch 46 videos, 10 podcasts and webinars to help you design your business and take you from step 1 to making money and growing it. And it's $99. I want to make it as affordable as Dave Ramsey's Financial Peace. It's amazing. You can just type in Mark Kohler 8 Steps on Google or get to my website, but get into a program, even if it's not mine, where you learn step by step what to do, and people, it'll help you out a ton.
Okay, video froze there for a second there, but where can they get it again one more time?
Sorry, thanks everybody. Bad internet here today, I guess. Get over to markjkohler.com. That's probably one of the best resources to get introduced to me, the law firm, the accounting firm. Mark, J as in Jolly, Kohler, KOHLER.com. Follow me on YouTube. Check it out. I got a free newsletter every week, a free podcast on iTunes. Been doing that 9 years, over 450 podcasts on all these topics and more. So I'm here for you. I'm grateful to be here with you, John. You're wonderful. Keep doing what you're doing, man. I love it. It's good.
Thank you. Yeah, no, thanks for taking the time. I appreciate it. And guys, definitely go and check it out. Like I said, I've been around the block as far as accountants and lawyers and legal structures and all of this stuff. And not only have I been around the block, I'm well read, right? I've read, so many books on tax law and setting up businesses and tax loopholes and strategies and all this stuff. And so, I guess what I'm saying is that, like, when I'm recommending Mark, it's because he really, really knows his stuff a lot more than any. I've always gone into and talked to accountants and had to kind of point to them the stuff that they're missing, whereas Mark knows way more than I'll ever learn in my life about this stuff. So I could definitely recommend it.
I live a very boring life, John. So I'm taking it in the shorts for you. There you go.
It seems pretty exciting, though. I mean, well, that's the other thing too. It's like you're doing all this stuff that we're doing as entrepreneurs. Like, digital marketing and publishing and podcasting and all this stuff. So I think that's the other thing is, like, I feel like I trust. It's always hard to explain to someone, I think, an accountant, like, what is your business? And it's like, well, I sell things online, and
what do you sell? Yeah, I sell how to sell online. Freak,
Yeah. All right, Mark. Well, I appreciate your time, and I'll definitely be setting up a meeting with you to discuss the rest of the stuff I gotta get cleaned up with my situation, but it's looking much better. So
yeah, well, thank you. And on that final note, everybody, find that trusted professional and have an appointment once a year.
Yeah,
it's like going to the dentist. Get in there, take your crap in there, get your diagram out on the table, make sure they're understanding the big picture, and you're not teaching them, and you're in the right spot, and do it once a year. And I know, John, we're coming up on that, once a year. Yeah. And you just said it. You're like, I got to get in, and because you're changing, you're adapting, you're growing, and I got to be there alongside you and make sure we're headed in the right direction legally and tax-wise.
So. Exactly. Awesome.
All right, man.
All right, Mark. Yep. Take care.
Take care.